let's just take Argentina. Argentina in the year 2000, and I give you $1 million and I say you can buy anything. Okay, well, buy any company. Let's say I constrain you to buying companies. Well, what's the winning choice or winning strategy in Argentina if you're limited to buying equities in Argentina? And the answer is there isn't any. You're not going to get that speech out of Charlie Munger or Warren Buffett or any economist, right? Their world is very, very constrained based upon what they learned. You know, Warren Buffett is the greatest investor of the last 50 years. Warren Buffett's investment advice is limited to picking stocks, equities, primarily equities in the United States, in the US dollar system. And occasionally he utters a few words on real estate, and he talks about commercial real estate a little bit, but mostly just equity picking, stock picking. And of course, if you think about that, you think, well, what are the assumptions he made? Well, the assumption is the United States won't fail as a country. The assumption is the dollar won't fail as a currency. The assumption is that companies will be allowed to exist by the political system and the US won't become communist.
In this video, Michael Saylor explains the concept of digital capital, comparing money to energy exchange for time. Michael Saylor offers insights into how capital dissipates over time, particularly through mechanisms like taxes and inflation. He uses the example of a $1 million property taxed at 1% annually to illustrate this point. Over 30 years, the property would lose $1 million, effectively diminishing its value. Saylor argues that even though investing in tangible assets like real estate seems secure, taxes cause these assets to gradually lose value over time, much like digital capital does. He also discusses Warren Buffett and Charlie Munger's investment strategies, noting that while they were highly effective in their era, the future lies in cryptography and digital assets. Saylor draws parallels between advancements in modern medicine and civilization, using these to project Bitcoin's role over the next 100 to 300 years as a key digital asset for the world. As we bring you more clips from the interview, please take a moment to like the video and subscribe to the channel to help us reach more viewers. Don't forget to turn on post notifications to stay updated with our latest content. Share your thoughts and observations in the comments section below. Thank you and enjoy the video.
Because if the political system shifts, companies don't hold any economic value at all. The value of all equity goes to zero in a communist system, right? Right after Lenin or Stalin or Castro took over, there is no capital value in any stock. So you have to make an assumption about the political system. But then again, if I take you and I drop you into Weimar Republic or Nigeria, or let's just take Argentina. Argentina in the year 2000, and I give you $1 million and I say you can buy anything. Okay, well, buy any company. Let's say I constrain you to buying companies. Well, what's the winning choice or winning strategy in Argentina if you're limited to buying equities in Argentina? And the answer is there isn't any. There's no, even if I made you God, even if you knew the future, if you could go forward in your time machine 24 years, see exactly what's going to happen, and then go back to the year 2000 in Argentina. If I construct the system or I construct the model such that you have to pick from amongst an infinite array of companies, there is no winning solution. They're all losing because all companies are currency derivatives. And the Argentine peso goes from 1 peso to the dollar to 1,400 pesos to the dollar. Here, we didn't see the political system go communist. What we saw was the currency goes to zero. And if the currency collapses, all currency derivatives collapse. So let's expand the investment model or the range of investment choices. And let's say you can invest in not just stocks, but you can invest in real estate or commodities, or you can invest in, in bonds. Okay, there's not a single bond that pays off in pesos that doesn't go to zero. There's not a single piece of commercial real estate that pays you rents in pesos, that doesn't go to zero, because they're all currency derivatives, and they're currency derivatives correlated to the ARS, to the peso. So if I have a time machine and I go forward and I know that the peso is going to devalue by 99.9%, it doesn't matter what your investment theory is with regard to choosing between real estate, bonds, and equity. Portfolio diversification is irrelevant. What you're doing is you're shuffling deck chairs on the Titanic. And so the big insight is the theory of economic relativity, or just understanding the Doppler effect, or understanding that it looks like the mountain is flying up in the air, but it isn't. You're falling, right? When you're falling with a big ego, you think that your investments are going up in value, but what's really happening is you're crashing to your death. You just have a big ego because you're arrogant, because you can't imagine having fallen off the cliff, right? So if I get you, high on drugs and you just fall off a cliff, you're like, I'm flying. No, you're not flying, right? You're dying. What is the material of economics? What's the fluid of economic energy? It's currency. Okay. What is capital? Right. Most economists don't even, if you go to ChatGPT and you type in define capital, the answer is awful. If you go to Google and you Google capital, you say define capital. What is capital? Go and ask, 100 economists or 100 business people, what is capital? And the truth is they have awful definitions, right, of what capital is. They struggle with it. And it's ironic because, capitalism is what we think we're doing, right? And capital markets are supposed to be moving capital around. And economists ought to be interested in the creation of capital and the proper allocation of capital, but they don't really understand what capital is. And they don't understand it because the way they move it around, their capital assets are all currency derivatives. A bond, a value stock, right? A piece of commercial real estate is a currency derivative. And then the currency is corrupt and it's crippled, right? And crumbling. So if you look back over the history of civilization, read Durant's Story of Civilization, and what you're struck by the fact that, infant mortality rate in London in the 18th century, it's 70% until it goes to, and then when you actually move out of the city, maybe you get to 40% infant mortality rate, and the average person's dying at age 30. And now you start to trace, well, why are they dying? They're dying because of dirty water. They're dying because of dirty air. They're dying because of dirty food. They're dying because of dirty instruments, dirty surgeries, right? They can't fix their teeth, dirty teeth. They don't know about sterilization. They don't know about antibiotics. They've got dirty air. They don't have clean air, clean water, clean food. If you drink water, you're drinking the sewage water and you're getting dysentery and cholera. Okay, so what do? So we drink wine and beer. Okay, great. So then we get gout because we're drinking alcohol all the time. So what is the story of civilization? It's you have to overcome this two ideas. One is you're trapped in a dirty system where all the fluids are dirty. The food's dirty, the water's dirty, the air's dirty, everything's dirty. And then the second is you have to get over your superstitious ideas, like the solution is I bleed you to death. I'm going to bleed you. I'm going to bleed the bad stuff out of you, right? So I'm leaching the energy out of your body. Today, you would say, pretty stupid. I'm operating on someone with rusty equipment. I'm infecting them. I'm bleeding them. I'm feeding them food that's got bacteria in it. And I'm giving them drinking water, bacteria in it. And everybody's dying. Okay. So, but they didn't know, right? They didn't know the instruments are dirty. They don't know about boiling water to avoid infecting the mother during childbirth, right? They just don't know. So the entire field of economics, it's got the same two ideas. Basically, the money's dirty. The money is ineffective. It's toxic. like capitalizing a company on the peso or the Naira or the Weimar mark, right, or something, capitalizing on a currency that's crashing and collapsing, the Russian ruble, right? That's, you know, just as bad as feeding your child sewer water, you know? And then the second thing they don't get is you don't help the patient by bleeding them. And so when you're inflating the currency, you're sucking the economic energy out of the system. What is capital? Capital is economic energy. Okay, what are all these assets? They're all capital assets. They're just ways we have to take the economic energy and we have to swap it into an asset that we can then use to trade in time or space. If you want to understand the universe, think in terms of energy, frequency, and vibration. Well, this is exactly what we don't do in politics or economics. And we don't really do that much in investment theory. Anything that an investor like Charlie Munger or Warren Buffett, they give you kind of conventional, particular solutions, but they're only useful if you don't question the assumptions and if you're living at the same time period they lived in. If you got to go back to 1970 and be a United States investor living the same timeline as Charlie Munger and Warren Buffett and did the same things they did, then their rules are relevant. But their rules don't make any sense in the Weimar Republic or the 16th century Spain or in Africa today, because they're just particular solutions to a differential equation based on a set of assumptions that aren't valid. So that they're not wrong in their frame of reference. They're just not right in the universe. You're not going to get that speech out of Charlie Munger or Warren Buffett or any economist, right? Their world is very, very constrained based upon what they learned, and they engage in lots of discussions of faux metrics, which are meaningless in their constrained synthetic world. And as long as their world consists of other people that live in the same world, then they have these synthetic, faux conversations that don't at all relate to the greater universe, but they just can't see the greater universe because they've just grown up in this very synthetic, idealistic, theoretical world that that's all they could imagine. Because just like doctors didn't understand germs till they had a microscope, until you have x-rays and microscopes, you think that that illness comes from demons and spirits. We're at this inflection point, moving from economics as art, colored by superstition and religion and ideology, and we're crossing this boundary where economics becomes science, and it's informed by mathematics and engineering, right, and the scientific method. But you have to date that, in my opinion, to January 3rd, 2009, when Satoshi unleashes Bitcoin, and there's a singularity, and all of a sudden there's actually engineering, physics, and mathematical principles that are starting to spread in a viral fashion through the economy. And it was like a nothing, and then it's $1 million fire, and then $1 billion network, and then a 10 billion, then 100 billion. Now it's a $1 trillion network, but still $1 trillion is 0.1% of the economy. So 0.1% of the economy has clean money, and 99.9% of the economy runs on dirty, toxic assets that are defective, that are operated by people that don't know they're trading defective assets. Because how would you know if you'd never seen clean? How do you know that you're dirty?
There you have it. Michael breaks down the comparison between clean and dirty money. In his discussion, he highlights the importance of understanding how economics and physics have combined to create clean digital energy, a reliable asset that outlasts generations. What are your thoughts on Michael's analogy, where he compares fiat currency to dirty money and digital assets like Bitcoin to clean money? Share your comments and observations below. Don't forget to subscribe to the channel, give this video a thumbs up, and share it with others. Thanks for watching.